So today I'm going to talk about 2.6, where you combine it with the Asian range session, and it is all basing in 15-minute time frame. Okay, let's get into it. So first, you're going to go down to a 15-minute time frame. You mark out the Asian range and the low. So with this, you're going to use the help of an indicator by Nico 948. That's the one that highlights the Asian range session. Very good. Depending on the time zone, you can adjust that. I already did that to mine to match your local time and dates. Okay, so after you mark out the zone, you're going to mark out the high and the low of the zone. You're going to now get rid of the indicator to have a clean chart. So second thing you need to do is let's say the Asia session has closed when price has not yet broken any side of the range. You're going to wait for price to break either the high or the low. Okay, so in this case we got the high broken. So what do you need to do? After understanding that the high has been broken, you're going to get your price range tool. You measure from the session high to the session low, which is giving you 19. So 19 divide by 2.6, you get 7. Okay, so 7, since the price has broken the upside, we're going to move the price range tool going or following the price to the upside until we see 7. Okay, 7 falls somewhere here. Okay, this is the zone now we're going to mark as our resistance or pullback zone. Okay, let me illustrate for you what I meant by that. Let's say price has been dropping from up, down, up, down, up, down, and then it finally changes its behaviors from, or the session ended, created that high and created this low. In this case, that's what we're looking at the real candle. You're going to mark out the highs and the lows of that session. Okay, once you mark that out, you're going to wait for price to break any side. If it breaks the lower side and then it pulls back just a little bit inside the zone and then it continues to break, you're going to get your price range tool from the high session high to the session low. Whatever digits you get on the price range tool, you're going to divide it by 2.6. The answer you get, you move your price range tool towards the side that got broken. Okay, if it is the high that got broken, you move your session range or price range tool to the upside. Okay, now that level or the answer you got represents the level where price is most likely to pull back, in this case like that. I hope this is clear enough. Now back to the live market. So here we're going to measure from the high to the low. Okay, so when we measure from the high to the low, we got a 7. Instead of moving from up to down until we see a 7 here, we follow where the price has gone, which is from low to the high. 7 fell somewhere there. Okay, all right, let's continue. Now after that happens, you are going to wait for price to come back to this level. You don't try to sell, don't try to buy when price is still in undecisive phase. Okay, so what we're going to wait for is price to pull back here. Maybe if possible it creates some liquidity, something like this, and then taps into here, and then we can buy peacefully. Okay, so after understanding that that's what we're waiting for, we are going to wait for price to pull back to that zone. Now, someone might see this because there is another break structure, and they might see this and think that price has left to them. This could be an inducement in most cases, because we all know a zone or a level or a price action leg that is created by the news, it is later getting swept for price to continue to the real side or to the real direction that was intended to go to. So I'm going to use this as a inducement. Short form is IDM. So once price pulls back just a little bit here in this format, I'm going to drop to a smaller time frame and then catch this trade effortlessly. So we see price pulling back just to fill in the, so price taps into the zone. Now after price taps into the zone, this is when you drop down to a smaller time frame to look for a sniper entry or to refine the entry without no further drawdown. Okay, so in a smaller time frame, in this case I'm using 3-minute time frame, we see that price tapped in and later immediately it pushed away. Okay, so what we need to understand here is that in most cases, if price taps into the right zone, it needs to clear out that level, the first touch on the zone. But if the momentum is so high and there is no solid reason as to why it should come back, it doesn't come back to this zone. Rather, it creates an internal structure that's something that looks like this, and then it pulls back here. So when it does this internal pullback, this is all calculated with a 2.6 mathematical strategy. When it does this, you're going to get your price range to measure this high. Whatever answer you get here, in this case is 6. So once we divide 6 divided by 2.6 is a 2. So you move your price range tool until you see a 2. Where the 2 falls is your sniper entry. In this case, it falls somewhere here. This is an illustration, please. So where the price range tool, the answer that it gives you is going to be your sniper entry to continue with the trend. Okay, so let me play price and see what actually happens. So it pulls back just a little bit. So this is what I've told you. Now you're going to get your price range tool. You measure from the high or from the low to the high, whichever side you start with is all giving you the same answer. Now let me give you an illustration about 15 minutes and 3-minute time frame. So in 15-minute time frame, it is a big leg of price action that looks like this, that tapped into the main point of interest. Okay, and then in the 3-minute time frame, it is going to be very little price action moves because it's a small time frame. Each time frame has its own move. They might look something like this, until it taps in. Now that tap in, remember in 15-minute time frame, this is one range. Okay, so this is the original trend in 15-minute time frame, but in a smaller time frame, it has the micro breaks and of structure that keeps on happening since it's a smaller time frame. So the reason why we drop down to a smaller time frame is to refine and get an entry without any drawdowns or little to none. Okay, so once this happens in 3-minute time frame, you're going to get your price range tool, measure the range that tapped into the zone to the range that has been formed. Okay, it is giving you 3. So once you divide 3 by 2.6, could be like a 1 or somewhere like there, whichever answer you get is going to be your sniper entry. Okay, is going to be your sniper entry because price literally pulls down here to that zone and then give you a beautiful rally. Okay, so back to the charts. So after measuring this range, like we saw earlier, it falls somewhere here. 7 divided by 2.6 is giving us a 2. So we move our price range tool up to when we see a 2. 2 falls somewhere here. Okay, so once we get this, now this is going to be our entry zone or our sniper entry, where you can actually leverage or put a very calculated position. Now for TP, we're just going to go back to 15-minute time frame here. Since the trend is bullish, we're going to target this high. All right, so targeting that high might take some time to reach there, but at least we know we can hold a trade that is going in the right direction. In 5-minute time frame, you see 3 is too small. So after we set our TP and stop loss, you can give the zone some breathing space in case it comes to clean out this first touch of the market. You can give it something like 10 pips or 20 maximum, since this is Euro USD, it's not that volatile. And now I'm going to play price and we see how this turned out to be. So immediately price touches the zone, it starts spiking up to show that the buyers are having big momentum in the market, which is a good sign that shows price is going to be pushed to the upside in the long run. So price ends up hitting our TP. This trade took 18 hours to hit our TP, which is not bad. So I'm going to be making more videos about the Asian session. You just have to stick around, subscribe so that you don't miss anything from me, and see you in the next one.